A common reason that I hear people give for not wanting to invest in the stock market is the fear of losing money. So today we're going to talk about some of the big reasons that people do lose money in the stock market, as well as some preventative measures that you can take to better educate yourself and make more informed decisions. Of course, the risk of losing money is always going to be there, and these are just my opinions, but hopefully you can find some of this information helpful in kind of guiding you on your path towards investing. The first reason that I see people losing money, and I've actually gotten a few messages about this week, is investing money that you are not prepared to lose. So under conditions like we're currently in, it's not uncommon to see your portfolio go down 20 or 30 or 40%, and you have to be able to stomach that. If that's money that you cannot afford to invest and that you can't really handle seeing take those big swings, then you don't have to invest it. No one is making you invest it. Just because everyone is running around kind of being like, buy now, it's the bottom of the market, no one is forcing you to invest money that you can't invest. If you're not in a good position to be putting up that extra money to invest, then it may just not be a good time for you, regardless of what the market is doing. Also, if you need that money, but the only reason that you're really considering investing is because you're banking on that stock going up in a few months, you might want to reconsider your reasons behind investing, because that's getting a little bit more into a gambling mindset. You also have to consider what would happen if it didn't necessarily go the way that you anticipated. So with the current conditions of the world, what if that continued on for 6 more months? And not saying that it will, but if it did, do you have emergency savings set up to cover your food, your shelter, your water? All of that is really important. So if you're going into investing kind of just as a gamble, it may not be the best time to do that. The second reason that a lot of people do lose money in the stock market is because they don't have a plan. So when you're going through the process of actually choosing stocks, for me, I like having a general plan laid out. So some good questions to ask yourself are, why are you buying this company or this stock or ETF? What price would you sell it for? Do you plan on selling it? And if so, what's your time horizon on that? Are you trying to sell it tomorrow or in a week or in 10 years or never? And if you are going to sell, what is your reasoning behind why you think that stock will ever hit that price? And also, what's your reasoning for selling it at that price? It's also important to consider the risk level of the stock. So is it super volatile? Does it barely move? Is it pretty steady? And no matter what the answer is to that, are you prepared to handle that? In my opinion, I think it is good to start asking yourself those questions so that you can start developing a plan for your general investing strategies. And it also helps you just fundamentally understand what you're investing in and why. And it can be useful to look back at later if maybe the stock is dropping and you're kind of panicking, to go back to that plan that you had and remember why you bought the stock in the first place. So just blindly choosing stocks is a reason that people do lose money in the stock market. And on that note, just in general, not doing your due diligence and not doing research is probably the biggest reason that people lose money. If anything sounds too good to be true, it is. And this is in regards to stocks, stock tips, people making random comments on Facebook and Instagram. Just be very, very careful about where you're getting your information from. When I'm reading articles or watching videos or just like reading through comments, I do like to cross-check information to make sure that, number one, that it actually matches what the company is putting out, and also just making sure that the information is correct. And it frightens me a little bit, especially now, to see how eager and how quick people are to take random advice that they find on the internet, but they're so hesitant to work with a financial advisor. It's very easy to get wrapped into all of the hype, and people on Instagram and Facebook and YouTube get very, very excited about their investing. So it's hard. It's very easy to be influenced by random opinions coming from every direction. If you're doing individual stock picking especially, it's really important to look at that company's fundamentals, and that should be part of that whole planning process that we just talked about earlier. So some things that you can start looking for are, what is the company's debt to equity ratio? What are their earnings? What is their price to earnings ratio? If you're into dividend investing, what is their dividend yield? It seems simple, but so many people just like completely ignore all of that information, and they'll just buy whatever their friend on Facebook Facebook is buying. And if you're not sure what any of those were, I do have an older video on choosing stocks that does go over their terms, but if you're someone that needs like very clear textbook definitions, I also mentioned this in that video, but this book, it looks silly and it's not super fun to read, but everything is broken down into very clear, like different books. Each one of those has different sections that goes over all of the different terms and like why they're important. So I will find the newest version of this on Amazon and link it in the description. So a lot of people will say that panic selling is one of the main reasons that people lose money in the stock market, and that is very true. But I think that the root of that really is just not observing your behavioral patterns. As you start trading or investing, you'll notice that you start reacting to things in different ways, and sometimes they're not in ways that you would think that you would react. And part of that is going to be making mistakes. So you may find that maybe you're someone that really panics when a stock goes down and you immediately sell, or maybe you find that you get like way overconfident in something, or you may just notice that you're consistently making the same mistake over and over. So there is actually a way that you can start testing this without using your own money, and that is with paper trading. So I have up a paper trading account in the background. Brokerages like TD Ameritrade and Webull offer paper trading, which is basically, it's also called simulation trading or virtual trading, and it's just a simulation. You're getting to watch the real markets in real time and you get to buy and sell, but you're using fake money. So it's just a good way to practice, and not every platform does offer paper trading, but for the ones that do, it's a really good way to start out and to start learning their platforms first of all, but also to start learning how you kind of react to things. And it will be a little bit different when it's your actual money on the table and not fake money, but it can start to at least give you an idea of patterns that you might start to see in your behavior. At the very least, it's just a good way to practice and a good way to learn the platforms and start learning different order types and what different functions are within those platforms. And the fifth way that I see people losing money is by not getting help. And I don't mean off of Facebook or YouTube comments. If you're really struggling with where to start, or if you're dealing with a larger amount of money and you're just like, help, what do I do with it? I have no idea. That's when it may be good to look into getting a financial advisor. And some people are going to hate on it because it will cost you money, but if you truly just do not know where to start and you are very, very uncomfortable making that decision by yourself, or if you just want a bigger picture plan laid out for the money that you do have and advice on where to put it, then in that case, a financial advisor may be beneficial to you. So you have several ways that you can do this. You can either go and find your own financial advisor, or you can also usually call up your brokerage and ask them if they have any financial advising services, and they will usually be willing to pair you with someone. Now, it is important to also do your research on the different types of advisors. Some types of advisors, like fiduciary advisors, are legally required to work in your best interests, and some other types of advisors are not. So just do your research, and it's totally up to you if you do want to work with a financial advisor, but it may be beneficial. Now, if you're kind of on the edge and you're like, I don't really want a financial advisor, I kind of want to do it myself, but I still am learning, I don't fully understand it. I don't really know what direction to go in. I'm kind of surprised by how many people aren't aware of this, but these brokerages have libraries of content that you can use and that are usually just indexed somewhere on their website. Most will have a learning center, so definitely Google that. Like, you can Google Charles Schwab Learning Center, TD Ameritrade Learning Center, and it'll pull up the educational section of their website that has all of their articles, videos, seminars, webinars, like everything is compiled all into this one resource section. And they keep all of that open on their website for you to use, and it's wonderful. But in addition to that, the large brokerages like TD Ameritrade and Schwab will actually have in-person events that you can attend. So these will be like live seminars. They also have workshops, and those are really good if you want to go in person and get your personal question answered. And they can definitely answer questions about their platform better than anyone else on the internet. And obviously, like, the live events won't continue until the world is like off of lockdown, but once we're back to normal, those events are a great thing to attend, and it's really a good way to get more more like one-on-one interaction with them and really start to learn how to best use their platform for you. At the end of the day, you're the only one that's really responsible for your investing decisions, so it's super important to do your research and to make sure that you're making informed decisions. So I hope you guys enjoyed the video. Remember to subscribe to the channel, and I will see you guys next time.